The silence from the mainstream media is deafening. While the financial news networks distract you with record stock market highs and political theater in Washington, the real story, the one that guarantees the destruction of your wealth, is unfolding 6,000 miles away in Beijing. We are witnessing the final days of the greatest credit bubble in human history. The global financial system is sitting on a $318 trillion mountain of debt, and the fuse has just been lit. For years, we have warned you about the debt bomb. We told you it was unsustainable. We told you the math was broken. But what we're seeing now in late 2025 is not just a crack in the dam. It is a total structural collapse of the second largest economy on Earth. And the terrifying part is that nobody is talking about it. They are hiding it. They are suppressing the data. They are gaslighting the world to prevent a panic that would vaporize the global financial system in 48 hours. To understand the magnitude of the catastrophe facing the Chinese Communist Party, and by extension the entire global economy, we must first dissect the anomaly that is occurring in the Chinese bond market. For decades, China has been the engine of global growth. They built cities where there were rice paddies. They built high-speed rail networks that span a continent. They consumed more concrete in 3 years than the United States did in the entire 20th century. But they did not build this with cash. They built it with debt. Massive, unprecedented, unimaginable amounts of debt. And now the bill has arrived. The official statistics claiming a 5% growth rate are a lie. The official debt numbers are a fabrication. Our forensic analysis of the real data reveals a terrifying truth. China's true debt-to-GDP ratio has breached 318%. Some shadow estimates put it as high as 450%. This is not a slowdown. This is a mathematical state of insolvency. The country is bankrupt. The core of this crisis is a financial instrument that most Western investors have never even heard of. They are called local government financing vehicles, or LGFVs. These are the hidden detonators of the $318 trillion bomb. In China, local governments were legally banned from running deficits. So, to meet the growth targets set by Beijing, they created shell companies. These corporations borrowed trillions of dollars from banks and shadow lenders to build infrastructure that generates zero revenue. They built bridges to nowhere. They built empty industrial parks. They built airports that have never seen a plane. These assets are worthless, but the debt remains. Our research indicates that there is approximately $10 trillion of this hidden debt sitting off the books. That is 72 trillion yuan. To put that into perspective, that is roughly equal to the combined GDP of Germany and Japan, entirely hidden from the public ledger. This is a black hole of liability that is swallowing the Chinese economy whole. And it gets worse. We are entering a phenomenon known as a doom loop. As of November 2025, China has entered its third year of factory gate deflation. The Producer Price Index, or PPI, is currently sitting at negative 2.2%. This is the nightmare scenario that central bankers wake up screaming about. When you have 300% debt and negative inflation, the real value of your debt rises every single day. The revenue companies earn to pay back their loans is shrinking because prices are falling. But the debt principle remains fixed. It is a mathematical death spiral. In 2010, it took 1 yuan of new debt to generate 0.8 yuan of GDP. Today, in 2025, it takes nearly 9 yuan of new debt to generate a single yuan of growth. The engine is broken, the car is running on fumes. The driver is flooring the accelerator while heading straight for a cliff. The Chinese government knows this. They are terrified. That is why late last year and throughout 2025, they announced the so-called 10 trillion yuan debt swap program. The media hailed this as a stimulus. They called it a rescue package. They lied. It was not a stimulus. It was an accounting trick. It was a desperate shell game designed to move the bad debt from the left pocket of the local governments to the right pocket of the provincial governments. It did not reduce the debt. It just nationalized the losses. It was a signal to the smart money that the situation is critical. The 10 trillion yuan swap only covers about 16% of the hidden debt problem. The remaining 84% is still there, accumulating compound interest at unsustainably high rates. It is like trying to put out a forest fire with a water pistol. The failure of this rescue package has triggered a crisis of confidence in the shadow banking sector. This is the dark underbelly of China's financial system, estimated to be worth $12 trillion. This is where the wealthy Chinese elite parked their money. They bought wealth management products that promised safe 8% returns. They were told these products were backed by real assets. They were lied to. These products were backed by the empty apartments and the worthless loans of the LGFVs. Now the trust is gone. Major shadow banks like the Zhongji Enterprise Group have collapsed. The products are being marked down to zero. We are seeing a slow motion run on the bank where the richest people in China are watching their fortunes evaporate overnight. This creates a psychological vortex. When the rich lose their money, they stop spending. And when they stop spending, the deflation gets worse. When deflation gets worse, the debt burden gets heavier. It is a positive feedback loop from hell. But why should you care? Why does a debt crisis in China matter to a guy in Ohio or a family in London? It matters because we live in an interconnected global financial system. China is the load-bearing wall of the global economy. If that wall collapses, the roof comes down on everyone. There are three primary contagion vectors that will transmit this crisis to your doorstep. The first is the commodity crash. China's insatiable appetite for raw materials drove the economies of Australia, Brazil, and Africa for 20 years. If China stops building, the demand for iron ore, copper, and oil collapses. We are talking about a depression-level event for resource exporting nations. The second vector is deflation export. To keep their zombie factories running, China is currently flooding the world with cheap goods. They are dumping electric vehicles, solar panels, and steel onto global markets at a loss. They are exporting their deflation to Europe and the United States. This destroys domestic industries in the West and forces governments to erect trade barriers. We are already seeing this with the tariffs of 2025. This is the start of a trade war that will fracture the global economy. The third and most terrifying vector is the Treasury market. This is the nuclear option. China holds roughly $750 billion in United States Treasuries. These are their rainy day funds. As their domestic banking system implodes, they will face a liquidity crunch. They will need cash to bail out their dying banks. Where will they get it? They will be forced to sell their foreign reserves. If China begins to liquidate $750 billion of U.S. debt in a panic, it will cause a spike in U.S. interest rates that will shatter the American housing market and the stock market. You cannot dump that much debt onto the market without breaking the plumbing of the financial system. This is the margin call heard around the world. The $318 trillion global debt bubble depends on low interest rates to survive. If China forces rates higher, the bubble bursts. The signs are already there for those who know where to look. Look at the LGFV bond issuance data from October 2025. It collapsed to a 5-year low. The market has stopped lending to these zombie entities. The smart money has already left the room. They know the default is coming. They know the emperor has no clothes. The Chinese government is trying to hide the truth with regulatory forbearance. They are telling banks to extend the loans. They are telling auditors to ignore the bad debts. They are engaging in a strategy of extend and pretend. They roll over a bad loan into a new 30-year bond and pretend that everything is fine. But you cannot cheat math forever. Eventually, the cash flow dries up. Eventually, the workers stop showing up because they are not getting paid. We are already seeing protests in Chinese cities. We are seeing unpaid civil servants. We are seeing the social contract fracture. This is not just a financial crisis, it is a regime crisis. The legitimacy of the Chinese Communist Party is built on a single promise. We will make you rich if you give us your freedom. That promise has been broken. The youth unemployment rate is so high they stopped publishing the data. The housing market, where 70% of Chinese household wealth is stored, has collapsed. Prices in Tier 1 cities are down 20%. Prices in Tier 3 cities have gone to zero because there are no buyers. There is no liquidity. It is a no-offer market. Just like we saw with the silver squeeze, when the liquidity disappears, the price discovery mechanism breaks. The value of your apartment is theoretical. You think you are a millionaire, but you cannot sell your asset. You are trapped. The implications for the West are catastrophic. For 40 years, the West outsourced its manufacturing to China to take advantage of cheap labor and cheap credit. We built our supply chains on the assumption of Chinese stability. That assumption died in 2025. We are now facing a supply chain shock that will make 2020 look like a dress rehearsal. When the factories in Guangdong shut down because they cannot get credit or because the electricity is turned off the shelves at Walmart, go empty. When the components for your antibiotics or your electronics stop arriving, the entire just-in-time delivery system seizes up. This is the fragility of globalization exposed. We outsourced our survival to a nation that is essentially a Ponzi scheme wrapped in a flag. The parallels to Japan in 1990 are obvious, but they are misleading. Japan was a wealthy creditor nation with a high per capita income when their bubble burst. They could afford a lost decade. China is a middle-income nation with a rapidly aging population. They will get old before they get rich. They cannot afford a lost decade. This will not be a stagnation. It will be an implosion. And unlike Japan, China has capital controls. The money cannot leave. This creates a pressure cooker environment. When the citizens realize their money is trapped in a dying system, the panic will be absolute. We will see a flight to safety into physical assets. Gold and silver will disappear from the Shanghai Gold Exchange. We have already reported on the premiums in Shanghai expanding. This is the smart money front running the collapse. They are trading their paper yuan for physical metal because they know the paper is destined to burn. The global elites are terrified of this outcome. That is why you see the emergency meetings at the IMF and the World Bank. That is why you see the coordinated central bank action. They are trying to engineer a soft landing. But you cannot land a plane that has no wings. The structural imbalances are too large. The debt is too big. The leverage is too extreme. They have kicked the can down the road for 20 years, and now they have run out of road. The wall is here. The collision is inevitable. The $318 trillion figure is not just a number. It is a weapon of mass financial destruction. And the trigger is in the hands of a desperate regime in Beijing that is running out of options. What happens when the second largest economy in the world simply stops paying its bills? What happens when $10 trillion of hidden debt is suddenly marked to market? It triggers a global margin call. Every asset class will be correlated to one. Stocks, bonds, real estate, they will all be sold to raise cash. Liquidity will evaporate. The only assets that will survive are the ones that have no counterparty risk. Gold, silver, Bitcoin. Hard assets that cannot be printed and cannot be defaulted on. The era of the fiat dollar system was built on the petrodollar and the recycling of trade surpluses. If China stops recycling its surplus into US Treasuries, the system breaks. We are witnessing the bifurcation of the global economy. The West is drowning in debt, and the East is collapsing under the weight of its own malinvestment. You need to understand that this is being hidden from you on purpose. The financial media relies on advertising dollars from the very banks that are exposed to this debt. They will not tell you the truth until it is too late. They will tell you it is contained. They will tell you it is a buying opportunity. Do not believe them. Look at the data. Look at the negative PPI. Look at the collapsing bond issuance. Look at the frantic debt swaps. These are the actions of a system in terminal distress. The panic in Beijing is real. The technocrats know they have lost control. They are trying to hold back the tide with a broom. They can delay the inevitable for a few more months, maybe a year, but they cannot stop the math. The explosion of this debt bomb will mark the end of the post-1944 economic order. It will reshape the geopolitical map. It will destroy the purchasing power of fiat currencies. It will transfer wealth from those who hold paper to those who hold real things. The great stagnation is here. The world is sleepwalking into a depression because they refuse to look at the reality in China. Do not be like them. Do not rely on the official narrative. The $318 trillion debt bomb is ticking. The countdown has started. The detonator is armed. We are standing on the precipice of a historic event. The Black Monday of the global credit cycle is approaching. When the LGFV market finally freezes completely, it will trigger a chain reaction that no central bank can stop. The printing presses will run hot. They will try to inflate the debt away. But that will only destroy the currency. You are trapped between deflationary collapse and hyperinflationary response. The only exit is through the door marked physical assets. The window of opportunity to position yourself is closing. The smart money is already moving. The central banks are buying gold at record rates. They know what is coming. They are preparing for the default of the Chinese sovereign debt model. The question is, are you ready? Have you diversified out of the paper system? Do you own things that are real? Because when the smoke clears from this explosion, the paper wealth of the last 30 years will be gone. The pension funds invested in Chinese bonds will be wiped out. The portfolios exposed to global growth will be decimated. The only thing left standing will be the truth. And the truth is that you cannot print prosperity. You cannot borrow your way to wealth. And you cannot hide $318 trillion of debt forever. The truth is coming, and it is going to hurt. The disconnect between the stock market and the real economy has never been wider. While traders celebrate the Fed pause, the foundation of the global economy is rotting away. China's 318% debt to GDP is the anvil that will drag the world underwater. The deflationary pulse coming out of Beijing is the warning siren. It is telling you that demand is dead. It is telling you that the consumer is tapped out. It is telling you that the credit cycle has turned. The expansion is over. The contraction has begun. And because of the leverage, the contraction will be violent. It will be sudden, and it will be unstoppable. Do not let them gaslight you into complacency. The risks are higher now than they were in 2008. The numbers are bigger. The politics are more toxic. The geopolitical tensions are more dangerous. We are in a cold war and an economic war simultaneously. And the weapon of choice is debt. China has weaponized its balance sheet, and now that weapon has backfired. The shrapnel from this explosion will hit every portfolio in the world. There's no safe harbor in the paper markets. The contagion will respect no borders. As we move deeper into late 2025 and early 2026, watch the renminbi, watch the capital outflows, watch the LGFV default rates. These are the canaries in the coal mine. When they stop singing, the gas is already in the room. The $318 trillion time bomb is the single greatest threat to your financial future. It is not a theory. It is a reality. It is happening now. The ghost cities are silent. The factories are slowing. The bankers are sweating. The end of the illusion is at hand. Prepare accordingly. The clock is ticking. Monday is coming. Are you ready?